Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. It's Friday. We made it to the end of the week. We got June 18th. What I want to talk today about is, well, we're going to talk about stocks, we're going to talk about gold, and we're going to talk about silver. Now, we had the Fed meeting on Wednesday, and as I had a hunch, they were going to send the markets lower. Now, why are they sending the markets lower? What did the Fed say? Well, he said, instead of waiting until 2024 to raise interest rates by 1/4%, we might raise it by 1/4% in 2023. And apparently the markets didn't like this. What really didn't like this is gold and silver. They got smashed. They got hit hard. Look it. Here's the thing. This is a gift, I'm telling you. If they do not raise interest rates until the 2023, 2024, and when they do, they're only going to raise it by 1/4%. Let me give you an inside secret here. They're not going to raise interest rates. They can't. They're never, ever, ever going to raise interest rates. If they do, they know that this will come crashing down. They can never, ever, ever stop printing money. If they do, everything will come crashing down. So their little talk of saying, hey, we might raise interest rates in 2023 by 1/4%. Oh my God, sent gold spiraling. I love that. I actually love that. I really do. So let's talk about what I'm doing today. Okay, so let's take a look at the SPY. Here's the SPY, right? So we got this is the 50-day moving average, and you'll notice straight up, straight up, straight up, straight up. Okay, now yes, we come down, touch it, then we bounce again. We come down, touch it, we even went a little lower here, but we bounce again, came down, touched it, bounce again, come down, touch it, bounce again. Well, we came down and touched it here. Now, do I think this dip should be bought? Every dip up until this point should be bought. And yes, I do think this dip should be bought. We probably have a little bit farther to go. Now, let me tell you why. Let's take a look down here at the Dow Jones Industrials. Okay, this is the DIA. Now, here's what scares me a little bit. You see how it's always been straight up on this 50-day moving average. Come down, touches it, bounce. Come down, touches it, bounce. Come down, touches it, it bounce. But what happened here? Well, we're doing some real damage on the Dow Jones Industrials right now. We're down about 450 points just today. And we have broken through. We've broken through the 50-day. Now, here's what's scary. There's a lot of air between the 50-day moving average down here to the 200-day moving average. Could it pull back that far? Yes, it can. Will it? I don't think so. I think the Fed jumps in, starts printing the money again, and maybe even gets another stimulus package going out. I don't know. I just don't think it's time to give up on the market yet. Now, if you keep follow me, I will alert you to when that time is coming. And that time may be soon. It may be right now. We'll keep a watch on this. But the Dow Jones, a lot of damage being done here. Now, I do think we're going to bounce back up to the 50-day. And that's where the buy the dip is. But when we bounce back up to that 50-day this time, that may be the signal to get out. It might not hold. It might come tumbling all the way down to the 200-day or farther. Okay, so right now, I still think buy the dips, but be cautious. Be a little cautious. I do think the Dow Jones is going to bounce back up to the 50-day. But that, you see, the 50-day has always been, the support for it. Always been the support. We always bounce off of that. But now we've broken through it. So now what does the 50-day become? It becomes the resistance. So when we get up again to the 50-day, that may be a time to get out. It might be. I'll keep you posted on that. Hit the subscribe button so we can talk, and I'll keep you updated on that. Okay, but yes, right now, I think it's almost time to buy the dips. You get a little more weakness today, yeah, you probably want to buy this. But what I want to talk about is gold. Gold and silver, they just got hammered. Just hammered. hammered. Okay, so we get this gold run going up, right? We're having a nice little run up, and then we get this pullback, and you notice how this 200-day moving average, we were sitting right on it, and I was sort of hesitant if it was going to hold or not, because it's kind of sloping down, but I really thought the 50-day would hold, but we broke right through both of them. Okay, we broke through both of them. Now, why? Well, this excites me. Now, I'm a gold stacker, I'm a silver stacker, but this gets into the trading time. This is where I do my trading of it, because it's an oversold condition. Okay, so we've had this run up from, I'll just give you rough numbers. On the GLD, we go from 158 to 178. 20 points. Now, what do I like? I like a 10-point pullback. 50% retracements, Fibonacci retracement levels. 50% is one of them, 33%, 63%. I think those are right in the ballpark. But the 50% one is where I like to trade because it's easy to remember. When you retrace 50% of the run-up. Now, we were down here at 158 is where the run-up started, and it ended up here at 178. A 50% retracement's 168. Now, we broke a little lower. I would have bought it at 168, but we're down here at 166. I'm a buyer down here. I think yes, gold is a buy right now. Now, why do I think that? Well, let's take a look at this thing. It's called the CCI, the Commodity Channel Index. Now, you'll notice every time the Commodity Channel Index, when it drops below 200 for gold, which was right here, gold bounced. Okay, again, it did it again right here, gold bounced. Okay, again, it did it again right here, gold bounced. Okay, now what's it done? Well, it not only dropped to the minus 200, it dropped to minus 300 because it just overshot to the downside. Every time we're down here, gold bounces, maybe only short term, maybe only a short term bounce, but gold usually bounces from this oversold level. And we are oversold on gold right now. So I am the GLDs where I traded. I'll be a buyer here, and I'm waiting for the bounce back up to the 200-day moving average. So it's down here at 166. I think we'll bounce to 172. We'll see. But what I really get excited about, well, silver. Oh, silver. I love silver. It's so cheap. It's just the most undervalued commodity we have right now. And right now, look, it's sitting right at the 200-day moving average, which is support. This is the SLV, and this is paper silver. This is not physical silver. I stack physical, but it is time to do some trading. Okay, this is time to do some trade. I think this 200 days is going to hold for silver. I do. We'll see if I'm right. But anyway, silver's a buy here. The SLV's a buy here at 24. I think he'll hit new highs. I think he'll get above 28. I think he's going to do that over the course of summer. Summer's going to be very positive for silver. That's my prediction. Maybe I'm wrong. I'm a stock market gambler. This is what I believe. You got to do your own research, but I think this 200-day moving average is going to hold. Maybe it dips below it. Oh, if it dips below it, then it's really a buy because the 50-day is so far above the 200-day. So if it got down here to 23 again, oh, absolutely. Load up the truck. I'm going all in. I'm going all in. Load up the truck. All right, that's just me. Hey, here is where I am loading up the truck. On the miners. This is called the GDX. This is the gold miners, the silver miners. This is the miners, okay? These are the gold miners. All right. So once again, we have this run up. We go from basically 30 to 40. 30 to 40, we had this nice run up. All right, 50% retracement, 30 to 40, it moved up 10 points. 50% retracements, 5 points. So 40 to 35 is where I want to buy it. Where's it sitting at right now? 34.83. I want to buy this. Matter of fact, I did buy this. I bought a lot of options on this. I bought options all the way out till September. I think this is a good play right here. I love this. I love this pullback. Oh, I did not think I'd get a chance to get this. And, oh, it's like I I get all happy. I get all happy. This is a trading vehicle for me, the GDX. You can also use the GDXJ. That's another trading vehicle. Okay, so why do I really like this? All right, so we see the pullback, 50% retracement, but we see that the 50-day moving average has broken above the 200-day moving average. That's called the golden cross. But yet we dumped. It just got crushed on this news from the Fed. And we're pulled all the way back down here. So we're way below the 200-day, but the 50-day is above the 200-day. That's where I'm buying. That's where I'm loading up the truck. Time to load up the truck. I'm in options. I'm a gambler, stock market gambler. You do what you want. I'm just telling you what I'm doing. What I did today. What I did today is I bought the options on the GDX. Options out to September. That's what I'm doing. Now, maybe I get my butt handed to me. Maybe I get crushed in it, but that's the trade I'm making right now. Oh, I think it's great. I think it's great. That's all I really wanted to talk today about. We got the weekend here. Weekend's here. Get out there. Have a great weekend. If you like this stuff, give me the thumbs up. You really like it, hit the subscribe button, because we got to talk next week. There's some stuff going on. There's some stuff going on that I want to talk to you about. So hit that subscribe button, and we'll talk again next week. Bye-bye now. I'm Tall Mike.